Hello everyone and welcome back to another video. During this video I'll be covering one of the best chart patterns that is available to traders and one that I use pretty frequently and in my own trading strategies and one of the best ways to spot reversals and entries. So I'll be covering some examples and how to use it, some tips on how to use it and more. So stay tuned for that. So the pattern that I'm going to be showing you is called Head and Shoulders, and it's a great reversal pattern to get entries on, and its name comes from its shape. So you can see that it kind of looks like two shoulders and a head in the middle. And if you get this pattern, you're going to be getting great entries most of the time. So this is a high win rate strategy, a high win rate pattern to apply to your strategy. And I usually do this pattern along with my own strategy, and I'll be showing you examples of that from my own trades in a bit. So this is an example of an uptrend, and I'll be showing you an example of a downtrend in a bit, but first I'll go through the uptrend. So in an uptrend, what you're going to be expecting is price to be making higher highs and higher lows, kind of like this. So you can see price moving upwards slowly into the upside. And when you get this pattern, I'll be showing you exactly why this works. So once price reaches this point, it enters this area right here, makes a new high and a new higher low, meaning that we are still in an uptrend, makes another high right here, but fails to make a higher low and makes an even low from before, or sometimes a lower low, depending on the scenario, and then fails to make a higher high. This means that the trend is exhausting and we might be seeing a reversal soon. So what we're expecting to be seeing here is price to be dropping down and causing a reversal onto the downside. Let's have a look at a real example of what I mean right here. So you can see that price was dropping downwards in this example, and then a reversal happened. It failed to make a lower low, and it made a higher high, higher low, and the price was went upwards. And we reached this area right here where we see that price went onto this area, made a higher high, higher low, a higher high again, and failed to make a higher low. This means that the trend might be exhausting and we see some trend exhaustion and we see sellers getting into the market, meaning that we might be going again into a downtrend. So makes a lower high and breaks into the downside. So where should your entry be in this scenario? And what I usually do when I'm trading this pattern, I draw a line onto the lows, so somewhere around this area. And this is actually a trade that I've gotten in, and this is not long ago, so it was a few hours ago, and I've closed this trade a few hours ago again. So I closed the trade around this area right here, so about 8 hours ago. And you can see I've entered on the market around this red candle right here. So my entry was this candle right here after the rejection of this yellow line. And this yellow line that I've drawn on the lower lows, on the lows that it made, this is called a neckline, and this is used to uh, we get a confirmation essentially that this pattern is valid, and we get an entry after it breaks through. So again, just to summarize what we are looking for, we're looking for a lower low or an even low. In this case, it was an even low. If I put this onto the lowest point of the wick, you can see afterwards it went upwards, made a lower point here. So let me get my trend line, and you can see that it dropped the price lower. And after breaking the neckline, some people prefer to trade it straight out of the neckline. So some people might be trading it right here and entering on the first bear candle that they may be seeing, but I prefer to do something different and instead to wait for a retest of the neckline. So you can see that we got a retest somewhere around this area, and eventually prices dropped down after another retest and eventually dropped to my take profit, which was this area right here. So was around this area, and you can see that it broke through that um, and got my take profit. And okay, so You can see why I prefer to test and wait for a retest, because this is a safer way of trading this pattern, as this is may still be in an uptrend. Even though you can see that there was an exhaustion in the trend, there still might be some force and cause the uptrend to carry on. So in this case, it went to our way, luckily. So that was good. But there are scenarios where you might be seeing an uptrend carrying on. So that is why I prefer to wait for the retest of the neckline and then enter my trade. So this is an example of when there is an uptrend, and I'll be showing you an example of a downtrend right now. Now, in this example, we have an inverted head and shoulders pattern, which is essentially what pattern we are getting when we are in a downtrend reversing into an uptrend. And the pattern looks like this in theory, but as I said, this pattern and basically all markets are not perfect. Most of the times you won't be able to spot this kind of perfect pattern as we see here, or uh, kind of perfect that we saw in the previous example. Instead, we're going to be getting kind of imperfect patterns and imperfect kind of sizes. For example, this might not be on the same height as the other one. This might be on a different level. So you won't be able to spot this perfect and exact pattern, and you need to be able to spot them kind of imperfect pattern, because markets are imperfect. Prices move imperfectly and not in patterns. So you need to be aware of this and make adjustments accordingly depending on the situation. So we are in a downturn, as you can see here. So if you were to go left, you can see that price was up and dropping down and reached this area right here. So price dropped kind of like this, making lower lows and lower highs, and then made a lower low, a lower high, but uh, then carried on with the trend. So you can see that it made actually a lower low. In this case, it was marginal, but it did make and got wicked back. So you can see some buyers getting into the market from the long wicks that we're seeing here. Long wicks usually are a sign of buyers in the market, or sellers depending on the situation. And you can see in the next candle right here, the next kind of push, the retracement, sorry, you can see these long 3 weeks. In this case, you can see that sellers and buyers are kind of battling each other out on where the market is going to be headed towards. And so in this scenario, you can either place your point onto this point up to here, or on the closes of the candle due to where where the candles close. So if you have multiple candles closing on the same area, in this case, I will have placed it in this area right here instead of the wicks. But it depends on how you feel about this. This is kind of a judgment call, and I didn't actually trade this pattern. I didn't actually see it, but um, I will probably place it on this area right here, but I will be a little bit cautious of how price would react on this level. So in either way, this means that there is a trend exhaustion due to failing to make a lower high, and this means that we might be onto a reversal. So we keep an eye on the reversal. So you can see that price pushed onto this level right here, and eventually moved to here, testing the neckline and pushing downwards, but eventually breaking the neckline. And this would have been, so let me draw the neckline, as the neckline is pretty important, and I'll probably draw it around this area right here on the close of this candle. So you can see a couple of retests here up and down, but eventually I will have placed my buy order around this area on this candle right here after the clean retest that we got here. Even though it would have been testy, obviously, in the trade, I would probably react, hopefully I will reacted in the same way, but it's different on hindsight and seeing it backwards. So it depends on the scenario, and I will have probably put my take profit on this area right here. So you can see, probably depending on how I felt, I would probably place it pretty safely, because it's a pretty large push. You can see it's a pretty large 2%, 1.5% So probably on this area right here, when there is 2 weeks here, and a test as well, so a retracement. So this will have been my take profit. Could have placed it higher. As you can see, price did move higher, and eventually will have gotten either of my take profits if I were to place it a bit more aggressively onto this point. But I will probably place it on this area right here, and my stop loss would have been beneath the neckline and around this area, I would say, where price kind of wicked towards, but pushed upwards aggressively. So this would have been my entry, and this is how I would trade this. But you can see that the pattern was imperfect, and due to its imperfectness, you may be able to actually use the trend line. So a trend line would have been made here. So after let me get my trend line tool. So trend line will have drawn something like this on the uh, line here, on the retracement that it made here. So you can see that it was battling and trying to break through on either side, and eventually pushed upwards above the neckline. So I will mark this as the area that it broke through and pushed upwards. So you could have drawn a trend line here, and you can see that actually this trend line was respected afterwards a couple of times. So using the new areas and the kind of uptrend, so the points that we marked out, we can create a new neckline, a new trend line, sorry, for our entry that will have helped us. So that is why I will have entered here after the test of the trend line again here, and the test of uh, trend line and neckline at the same time. So that will have been a pretty strong confluence, in my opinion. Obviously, each trader uh, performs differently and acts differently on each situation. So this is something to look out for. One thing that I forgot to mention is how I personally like to trade this pattern. So in most cases, I like to trade with the trend, as I feel this is the safest and most consistent way of making money. So in this example that I actually took the trade, the reason that I took the trade, even though with the price was moving upwards, if you can see here, we were actually in a downtrend. So after spotting this was actually a retracement back to this area of after a very aggressive drop of price right here. Price retraced back and then did this pattern and then went downwards. This means that we are actually trading with the trend instead of going against the trend. So we used a counter reversal pattern to make a trade with the trend. And if I were to apply my moving averages right here, make it visible, you can see that we were actually trading with the trend in this scenario. So you can see the long term was above the 50 in this instance, kind of crossed over, but it didn't bother me in this instance, and I was confident to place this trade as we were in a pretty aggressive downtrend, and I was expecting an aggressive retracement as we were dropping for a while, for a good few hours. And then after I saw the retracement and the pattern, I thought great, and it did apply with my own criteria and confluences for my own strategy. So that was an extra confirmation for me to place a trade. So this is how I usually trade this pattern, only going with the trend. I don't really trade counter trend. I don't like it that much. It depends on the situation, though. I rarely do so in some instances, but this is not my main way of trading. I usually go with the trend using the retracements. So you can see after the retracement, the pattern was formed, and then we could have gotten the entry at the area that I said. So uh, this is the pattern. This is how I usually uh, trade the pattern. For example, if you did an entry on this candle, could have entered on this candle here, right here. In hindsight, this would have been a better entry because it actually retested the trend line that was formed from the pattern. So that is one thing that usually people like to do so, and I like to do so. But I felt confident enough to place it in this area right here. But I usually like to go with the trend line as well, as it gives me that extra confidence of placing the trade. So this is basically my way of trading and how I would advise you to trade this pattern. It's a very powerful pattern that usually people look out for, and you can get a pretty good risk reward ratio. So in this instance, I forgot to actually show you my rewards to risk and how I place the trade. So I placed the trade around this area right here. So going short, placed it right here, and my uh, stop loss was around this area, I think, or will have been this area. I can't remember. But looking at it hindsight, I think I will have placed it around this area right here. If you want to be conservative, you could have placed it right here. But I like to keep a pretty high rewards to risk ratio. So I like to 2.5 would have been my risk to reward, and you can see that it actually played out nicely. And okay, so for take profit and stop losses, I usually like to keep it above the trend line, above the neckline, and try to um, if I have a choice of having above the support and resistance zone, I will do it at that as well. And okay, so having more confluences to this pattern is better. I wouldn't trade it solely because I saw the pattern, because it's not the most consistent way of trading. So just because I saw this pattern doesn't mean it's going to be going towards the direction that I am expecting it to. I need extra confirmation, extra confluences for this trade to work, and that is what I did here. So essentially, the pattern is a strong confluence and extra confirmation for you to be entering trades and spotting good reversals. So this is the head and shoulders pattern. If you enjoyed this video, make sure to like and subscribe on the channel. If you have any thoughts and any recommendations for a video, please comment them below. And thank you for watching. Have a good rest of your day, and goodbye.